This is Carl with the three things I'm watching for Wednesday, September 24th. Starting out, this Argentine tax cut that's really jumped up their soybean exports. I want to touch on that. And the main reason uh, Argentina wants to get U.S. dollars, and selling soybeans gets them U.S. dollars. They want it's more from the currency exchange rate. They want to capture the U.S. dollar to help support their economy. Um, these soybeans that they're offering, it's through the end of October. We'll see. China was in and bought apparently 10 to 15 vessels so far, and we've seen some other buyers in there. These soybeans are cheap enough that they work into the Chinese crush industry. China could crush these Argentine soybeans from their purchase point and still show profit. They can't do that with the U.S. and Brazil right now, so that's really drawing them in. Some questions starting to arise on the quality of these soybeans out of Argentina. We'll monitor that. I'm almost positive the Chinese importers will find something wrong with them when they get there. I would not be surprised at all. Another thing that's, on the whole U.S. export front that's about to become, I think, more of an issue here, and this is October 14th. That's when that $50 per metric ton charge goes on U.S. exports for vessels tied to China. China built, China flagged, you know it. Um, we'll all get a $50 per metric ton fee. I think that has started to, we want to look at why we haven't been selling new crop soybeans and such to China. We're actually making it difficult for China to do business with us. It's not the Chinese fault. Our policies are really making it difficult for not just China, but anybody to do business with us right now. And this is going to be one more chink in the armor of that. So be watching that. I do think that'll be a problem for exports when we move forward. The other thing watching, continue to watch yields and more so on grain quality. Yields this year, we know corn, just about everybody I've talked to, corn, not necessarily, even if it's not down from last year, it's well below expectations. And we are seeing a lot more guys saying my corn crop isn't going to be any bigger than last year. Soybeans, not enough have been taken out yet. Surprisingly, there's some reports of very good soybeans. I shouldn't say surprisingly, there's always going to be good reports, but what some of the guys are surprised at is how good their soybeans were when they got into them. Now, take that with a grain of salt. They're not great. It's not going to be a bumper crop, but they're better than what they thought they would be. There is some 70, 80, 90 bushel soybeans out there this year. There's going to be some 10 bushel soybeans too. That's what makes a crop. The variability in this is making it very hard to determine production sizes. So we'll get a little bit better understanding as we move forward. But the one thing I'm keeping an eye on is basis. Corn basis has started to tighten up in the West already. That is a telling sign. If you have, you've harvested what, 10% of the crop and you got basis starting to firm, tells us it's not there. Cash will lead the way. Those are the three things I'm watching today.